Jobs numbers, that's the name of the game today, and we'll be talking about it in the lead. Joining me as always is Jon Nadler. And Jon, thanks for dressing up for the occasion today.
Yes, I've decided to take a cue from the Gary Wagner School of Wardrobing, and he was gracious enough to lend me one of his best business outfits for the occasion, so here I am.
Right, Jon. Well, you know what we'll be talking about today? Jobs numbers coming in at the 80,000 mark. People had anticipated 100K, so a bit of a disappointment here. Gold not reacting well to the news. Break it down.
Indeed, as our good friend at Everbank, Chuck Butler, says, this is Friday Jobs Jamboree. And the consensus among polled economists, some 84 of them actually, prior to the release of the Labor Department statistics, was that we may have created 100,000 jobs in the States. That, again, did come in just under consensus at 80,000, as you mentioned. Obviously, it wasn't as dismal as the 69,000 that were reported in May. And it basically underscores this finding by one of the economists that the job market in the U.S. is plodding along, but healing at the same time. So as long as the trend stays what it is, and in yesterday's commentary I mentioned and pointed to a graph courtesy of ADP, which reveals the fact that job creation is in fact alive and well, albeit at fairly weak levels in the States, and that this whole development basically argues in disfavor of the Fed doing anything more at this point. Whether or not they'll do anything at the end of July when they meet again remains to be seen. But for the time being, the perception was that, well, with this kind of number, we don't force the Fed's hand, therefore sell off and go into safe haven. At the moment, that's one vehicle alone, and that's the U.S. dollar.
Jon, you mentioned the U.S. dollar. This is my question to you. Why is it performing well on the back of this news?
Well, it's not just this particular news that has helped the dollar in recent weeks, perhaps month now. It's the fact that when global investors look at alternatives, i.e. risk-taking in equity markets or commodity markets, perhaps looking at other currencies, they are basically faced with a very, very short list of alternatives, and there's very little room to go into things that could unravel underneath them, such as was the case certainly with the euro, which despite all of that pivotal EU summit meeting just a week ago, is now back under 124. Spanish bond yields are soaring to new records, if you like. And, the realization is that, yes, it may be the ugliest bell at the ball, but at the same time, we will take this dance with the dollar because it has come from severely undervalued levels in previous years, owing to this Fed zero rate policy.
So, Jon, is it not so much faith in the dollar, but really the best thing out there right now?
It is the best thing out there right now, and the trend is your friend, and very few commodity bulls are willing to stand in the way of that strength, because certainly it's approaching pivotal levels such as the 83 or 84 on the trade-weighted index, which if breached, solidly could lead to much higher dollars valuation, and of course. It's also the fact that perhaps the speculative crowd is sensing the end of a cycle here. And if, in fact, the Fed will very gradually, say a year from now, commence raising interest rates, then, of course, all bets are off because, suddenly the opportunity cost to remain in other assets will be pretty severe when compared to what a certain give will be by the dollar. So it's like I said, it's not exactly a flawless asset or a terrific currency, but it's also not the dog that many a doomsayer had made it out to be.
So Jon, a lot of people I spoke to said, don't expect any rescue from the Fed from now until the election. Do you not agree with that then?
In the sense that I actually don't expect anything more from the Fed, yes, I think that would smacks of some of a disagreement. But I will give one qualifier here. And that is that if we get some really nasty economic metrics between now and, let's say, the Jackson Hole meeting in August, then election year or not, pre-election campaigning or not, the Fed will show that it has the intent to, pump up the economy by the injection of some type of liquidity. It may not be a full-blown QE3. It may just be another version of Operation Twist, which is now running through year-end. But I don't think the Fed will be seen as standing idly by while the economy crumbles around it and do nothing. So again, it has to be on the back of some really nasty numbers, either on the employment front or the GDP front or some other metric that we haven't yet fathomed.
So, John, let me ask you, jobs figures not so rosy. Yesterday, ECB President Mario Draghi saying, hey, things are not really optimistic here in Europe. Should be a perfect storm for gold. It's not. What are your thoughts?
Well, one would think so. In fact, the race to the bottom in rates and the perceived debasement of currencies, that should all conspire to make for new records in gold. But as we have seen in 2008, and this perhaps is some sort of slow motion replay of 2008, hope not. When push comes to shove, and when people are really terribly worried, they will resort to cash, and it basically points to one type of cash at the end of this day, which is the US dollar. Certainly the ECB's reduction of its key interest rate to 0.75% and its deposit rate to 0 indicates the fact that they would really love it if the regional banks in the EU would start lending and obviously try to address that 11.1%, I believe, unemployment level that they're grappling with. Obviously, the US is far from that at 8.2. But like I said, if the conditions deteriorate anymore, then the Fed will, basically disregard what the pundits want and do something about it. All of this should have contributed to, new highs. It has not, obviously, because at the end of the day, the safe haven umbrella that people are preferring, and it could be, 2 or 3 years of preference, certainly not just 2 or 3 weeks, is the dollar.
So, John, just quickly now, key figure for gold, we're looking for 1640?
Well, yeah, I think you're looking at a channel here which is confined with a support putatively at about 1525. It must not be breached, or else we're looking at significantly lower prices. On the upper end of that scale, you could see the 1640 area as very important to overcome and solidly overcome in order to be able to talk about possibly 1680 or 1700. But the more projections we receive on our desk from various trading desks and institutions, the more we see that they are reducing price forecast for annual averaging gold this year by anywhere from 3 to 8% from previous projections.
All right, John, changing topics altogether now for the final question. Turkey could possibly help solve the current account deficit problem in India. Explain this news item, please.
Well, indeed, if India were to take a cue from what Turkey is doing in order to address its current account deficit problems, they've come up with an innovative way to free up a lot of the so-called under the mattress gold that lies around the country with the creation of electronic gold deposit accounts. Basically, they're customer accounts from which one can withdraw balances in the form of small ingots or Turkish lira, at will. And of course, this, much to the chagrin of the jewelers and many of the gold vendors in the Turkish bazaars, has definitely made a dent in their business of physical in terms of coins and jewelry. But at the same time, the government feels that it has, like I said, released this pent-up quantity of gold under the mattresses and reduced gold imports, which basically is an essential step in reducing current account deficits. As we all know, India has been fighting to reduce that current account deficit, the major contributors to which are, in fact, gold and oil imports. And they've slapped on tariffs, and they've come up with restrictions. They've even talked about a ban of gold coin sales in the country's banks, all in order to try to address this gold appetite among Indians with the aim of reducing their pretty terrible current account deficit. And as I said, Turkey has come up with an innovative way to do this. Maybe it will not solve the problem fully, but it's certainly an interesting step, and we should watch that development as well.
Jon will be watching that story closely then. Thank you so much for being with me this week.
Indeed, we will. Thank you.
And thank you for watching this edition of In the Lead. You can email me at newsfeedback@kitco.com. For Kitco News, I'm Daniela Cambone.